Hi traders, let me tell you one good news that Algo Merchant has just newly released for a new money management features in the AutoInvest software. So in this video, I'm going to teach you on how to ride on the opportunity to make fortune when market recovers, so you do not want to miss out the opportunity, and at the same time teaching you on how to manage your risk during this pandemic situations with this new feature. To start with, let me show you my brokerage account. So this trading account managed by Trident so far has been performing about 2.7% year to date, and if you compare it with market like S&P 500, it has tanked like 15 to 20% negative year to date. Well, so probably the right next question you probably ask is, when I receive more signals from the robot, how do I make use those signals given? Should I follow every signal? Should I follow partially, or should I ignore stops the robots? Well, so this is going to be the topic that we are going to discuss today.
As stock market is getting bearish, we think it's important for us to share our knowledge, opinions, and experience about the markets. So in this video, we will cover them in 3 different topics. First, understanding about the current market situation. Second, exploring personal strategy. And third, how to use the new AutoInvest feature. The sharing in this video is for information and personal sharing only. There is no advice or any recommendation given in this video to engage in any investment products or solutions.
Let me update you about the background of the market. Where is the market at right now? So in short, that the market is still in the bad shape. As you do know, it's whole things due to the coronavirus, and to a certain extent the oil price war that has caused the market like the S&P 500 has dropped 20 to 30% in last 1 month. And talking about Dow fell negative 10% in last Thursday, which is the worst drop ever since Black Monday happened in 1987. Last week, WHO has just declared that we are facing the global pandemic. And talking about Europe is now becoming the new center of virus, and United States probably the next one. Well, despite the United States government has taken steps like declaring a state of emergency and giving stimulus like a payroll tax cuts and interest rates cuts, well, they seems no longer effective because market is super panicking right now. So from the incident, we could guess that this market crisis may continue and prolong for some times. So during this crisis, we do not want our fear and emotion to take over and take control over the portfolio, but rather we have to stay rational in order for us to be able to identify those opportunities to make best out of situations. So in Chinese, we use the words weiqi to describe crisis, as the word wei represents the danger and the qi represents the opportunity. So if you do notice where the danger lies, there is the opportunity as well. Therefore, if you notice that a couple of the good traders or legendary investors like Warren Buffett, like he lives or indeed make a very good fortune usually during the market crisis, because this guy able to identify the opportunity to purchase stocks when they are in really good bargains. That's the reason why people say there's only 1% winner in the market and the rest of the investors, 99% of them, are losers. Well, because during the market crisis or during the crisis, a lot of people are really driven by the fear, by the emotion, and that's stopping them from further finding the opportunity from the markets. So once they suffer from the market drop, they panic, and then it makes them difficult to gain back, to ride back from the market opportunity. So to be the 1% winner, I would say it's not easy mentally, because you want to make the right decision at the right time with rational. So some people might be suggesting why not we do shorting the markets. Well, I would say just a bit careful with that because shorting the market might go against you as well since the market today is really unpredictable. So if I take last Friday 3rd of March as a sample case where the market S&P 500 sits over 9%, which is the biggest one-day gain since 2008. And if we did shorting, we're pretty dead by now. So what I noticed today, the volatility in the market extremely high. Well, that's probably because China seems to succeed containing the virus spread, or there could be a potential good news coming up too. Well, I don't know, and in all, we never know exactly when the market may recover. So let's do some observation about the markets.
This is the US S&P 500. Unless if we talk about the World War III, then we know for certain the market will rebound back at one point. So if we take back the case in the year 2000 where the dot-com bubble crash happens, and also for the year 2008 financial crisis happens, then the market plunged to about like 50%. And happens for the financial crisis as well. And then the big rebounds happen afterwards. So this is the support level here. Well, if I take those two incidents for today's context, then the support level right now at 2,500. So if you expect the market will plunge further down to 50%, then our next support level is going to be at the 1,008 or 1,007. And then if market is even getting worse further to 75% plunge, and you will expect that the rebounds is at 800 support level.
So the million-dollar question is, where is the bottom? And to be honest with you, I do not know where is the bottom, and I can assure you nobody knows where is the bottom. But it's likely that the more undervalued of the markets, then the higher probability and the stronger the rebounds. And so for my own personal strategy, I will always keep monitoring the support level of the S&P 500 and being updated with the current situations, and keep asking myself how confident I'm with the current support level to give the big rebounds. So let's say if it's about like 20%, then my next strategy or plan is probably I'm going to use or allocate 30% of my capital to be exposed in equity. So if I do hold 100k, for example, then I will take 30,000 to be invested in equity and keep remaining balance in cash. But assuming, let's say, if market drops further to 800 support level, and if I believe that this is really the bottom, then I will increase my exposure, maybe this time around by 80%. So back if I do hold like 100,000 capitals, I'm going to use the 80,000 to be exposed in equity and keep the 20,000 balance in cash. Well, the reason why I do that because I can never know exactly where is the bottom. So for me, I'm just being systematic, which means that I'm going to increase my stake and exposure whenever I see the rewards over the risk at that particular point is higher. What do I mean by that? For example, let's say today if we are at a low point and suddenly the pandemic is getting controlled. So what my plan next is that I'm going to increase my exposure more in the markets. So probably you do have your own view about the market. So what I'm going to do next is to show you how to play with the exposure in this new feature.
So to manage the risk of my portfolio, I usually focus and emphasize on 2 points. First, doing diversifications, and second, reducing my exposed capital. Well, diversification is something that we practice right now by setting up 10 positions for Trident or Orion and 20 positions for Vicky. But reducing exposure is something new, which is newly developed to our AutoInvest software. So that simply means we trade more stocks with lower exposed capital. And this happens when the market is uncertain and we're not confident with the markets. So in the normal market, I will set up 10 positions for my Trident account with 100% exposure. But right now, because the market is not normal, so I will lower my exposed capital relative to my confidence with the market rebounds. So let's say assuming if it's 20% the probability to rebound back, then I probably will allocate 30% of my exposed capital. But if it's like 80% or even higher, then I will allocate more, like maybe 80 or 90% of my exposed capital. But regardless of the exposure, I will still maintain the diversification. So I will, for example, I will still set up 10 positions for my trading account. So this is a dashboard view that when we first going to our VM. So let's say if you like to play with the trade exposure, we want to take note on the equity capital here. So as for my case, about 71,000 in dollars. Some of you perhaps has US dollars denominated currency account, but it doesn't matter. So let's say now we go to settings and robot settings. So this is the page that we play often to set up our positions. Well, for Trident, usually we aim to get 10 closes by changing the trade size here. The lower trade size, you're going to be getting more positions. But let's say if your focus is to reduce your exposed capital, so first you want to go to the advanced tab. So at positions here, you want to check the stop entering new positions, and then at the when total exposure exits button, keep it clicked as well. So at the percentage of equity, click the arrow and you can choose the selections of the maximum exposure that you want. So let's say if I would like to get 30, for example, then it will automatically compute and calculate for me. And for my case, that 30% of my exposed capital is going to be like 21,000 in dollars. So if you convert this number to US dollars, probably about like 15,000 US dollars, and you want to keep that in mind for now. So next I go to click save here. Now let's go back to a simple tab. Well, as my exposure account is at 15,000 right now, so what I like to do in order for me to have 10 positions, then I will choose 1,500 as my trade size and then I click save. Now if you do notice that the position here it jumps up to 51, but it doesn't matter because like we have set our maximum exposed capital of 30%, which is 15,000 US dollars. So on the 11th trade here, the AutoInvest will automatically reject the 11th trade. So you will not expose more than 30% of your exposed capital. So this is all I have on how to reduce your exposed capital.
So thank you for watching this video, and we're going to update you more about the research and our latest development. So if you still do have some queries about how to configure your personal settings, please feel free to reach us. You can email us at support@algomerchants.com, or you can call us at 67089337. Thank you, and I'll see you